Good morning, good morning. How's it going? Okay. Let's check. Are we live on YouTube? Good morning, good morning. Perfect. Awesome. Yeah, massive move already right when market opened up.
Yeah, yeah.
But
it went all up there, then Sharma is rejecting. It's always fascinating when you watch these candles, especially the New York Open. Yep. The indices they just fly in one direction and then reject and then go the other way. Wow.
It's fun when you start understanding why it's happening though, right? Like you see the big movements, you know exactly what the market's trying to do. And we don't get caught in that. Alright, let's remove all this. Let's look at the data points real quick and then we'll pull up the bigger articles. So looking at today, we had Bank of Japan governor who spoke in London session about the recent economic price conditions and monetary policy. So we're going to pull up that in a little bit. But let's go ahead. Just pull up the tabs here. Also, regarding this, last night I posted another video on YouTube specifically talking about USDJPY and how that impacts everything else across the board, like S&P 500, crypto, all that stuff. So I highly recommend, please, go ahead and watch that. So it gives you a good understanding of the cross-asset implications of this pair, especially USDJPY, and hopefully you guys get a better understanding of what's going on there. Alright, looking at ADP non-farm, this is excluding the farming and the government industries. So we still got a nice push here compared to the forecast and previous, which is setting up a pretty nice picture so far when it comes to the data points that we got yesterday with the JOLTS job openings, which beat the forecast by almost 750,000 jobs. And then today we got ADP non-farm that came out a lot higher than the previous in the forecast as well. It is NFP week, so let's see if we can continue getting those higher employment data points. And then in about 30 minutes or so, we have ISM services PMI coming out. Yesterday we had the manufacturing one, or 2 days ago actually, Monday, which came up above the 50 mark, but we know on the manufacturing side, that's mainly because of the war-driven manufacturing that's happening. Alright, so while we have the data points, real quick, I'm going to do the technical analysis and then we'll pull up the articles here. So based off of the daily time frame, we're still holding onto a resistance, which is the same exact level from the current weekly highs. $51,400. You've got your bottom wick rejection. 50,800. Drop down to the daily. I want to see price continuing to push below this, and that is going to give me the confirmation that I'm going to continue looking for sells. If price remains above this daily resistance here, which is the current support, we're just looking for a support formation into the zone and then a continuation right back up bullish. Now coming onto the 4-hour time frame, that's exactly what it seems like where the 4-hour candle made a massive bottom wick rejection, and right now it's still trying to find its direction, so we don't have a trade just yet. Come down to the 1 hour. So what I want to see is if price can continue breaking below this. I'm looking to the left where I'm setting the alert and I see a little minor support, so I'm going to give it this little room to see if we can actually get some candle closures. It seems like a pretty big range here for about 50 points or so, but I'd rather give up these 50 points than a continuation right back up. Can you guys hear me okay now?
Yeah.
Okay.
Yeah.
Sounds good. Someone on YouTube said that they weren't able to hear me, but hopefully that's fixed now. If not, just let me know in the chat. Okay, so then coming down to the 30-minute, last 30-minute candle, which was 30 minutes before the stock exchange opened, closed back down bearish. This is the current candle that broke the previous highs and the lows, showing some volatility. So we're still going to wait for candle closures here. At the bare minimum, we're waiting for at least 5-minute candle closures in either direction and then a continuation. So we have our alert set for our sells, for our buys. We're going to wait for price to continue pushing back up bullish. Come down to the 30-minute, the 5-minute. That's where the current resistance is formed. So anything in between here, we're not trading. We're going to wait for price to break one of these alert levels and then continue. Let's come over to NAS 100. Again, for US 30, if you're trading on Top Step, it's going to be YM. If you're doing micros, then it's MYM. For NASDAQ, it's going to be NQ. Just look at the candle structures. It should be the same. The price level should be a little bit different. So just adjust whatever the price level is. Just take a look at that. But the candle structure should be the exact same for you guys. Alright, 30,800 here as well. You've got your bottom wick rejection, 30,250. We're going to continue breaking our highs here, given the AI optimism that's really driving this entire move. So we've had this massive push up already. Last daily candle closed at the top of its range, creating a new all-time high. The current daily candle also created a top wick, still trying to find our direction. We're going to drop down to the 4-hour time frame. Take a look at the support that the current 4-hour time candles are forming on this time frame. If price can break below that, then we have our much cleaner sell opportunities to come all the way down. If not, we're just going to end up consolidating here. Even if you want to look for scalp opportunities, you're going to narrow in your zone a lot more based off of the hourly time frame. Anything in between, do not touch. You're looking for sells below 30,000, almost 620 area, which is this bottom wick rejection continuation down. And then we're going to look for our buys at the break of this top wick right here. Any questions on the equities before we move on to the commodities? Alright, let's go over to commodities and then we'll come back to the currencies. Alright, looking at gold, this week we're breaking our own lows. So what I'm going to do is map out this next support area right here. Not even the bottom wick from last week, just the wick rejections that I'm seeing here. Which is going to be... Actually, I'm going to do 44.10. Just keep it clean. And then we have our candle open from last week and the top wick rejection from this week, which is 45.53.5. Drop down to the daily time frame. As long as we can maintain below the support, we are still solid for sells. On the 4-hour time frame, it looks like a break and retest formation, so you do have a trade that's potentially setting up here, but you have a 15-minute candle closure here in just 2 minutes. So what I would do is, even on the hourly time frame, it looks like it would be the first clean bearish candle closure, breaking the previous lows. We did have these 2 candle closures, but it took us right back up bullish. Drop down to 30 and then the 15. So I want to see this 15-minute candle closure here in the next almost 2 minutes, and then I want to see a continuation right back down. So if I'm looking to the left and I'm creating an alert, I'm going to create an alert right at the support level right here. If this candle can close bearish, the next candle can give me a top wick and then continue pushing down. That is your sell to bring you down into 44.10. If you're trading this on Top Step, that is GC. That's the ticker that you're going to pull up. Or MGC, which is going to be the micro. If you've never traded commodities before, trade the micros first. Get used to those movements on the futures. We will have a funded account accelerator that will be live at the end of this month. So you guys will see me pull it up during our live sessions and trade that with you guys. But some of you guys already have that account right now. So then we're going to, I'm just going to help you out with the tickers as of right now. Alright, on silver you have 77.16. This is your 71.97 area right here. Now it's just got a alert hit. We're going to give it a second before we hop over there. Now coming over to the daily time frame, we have the support formation. As long as price remains below the support, we're still solid for those sells. Come down to the 4-hour time frame, it seems like a break and retest right above the zone. So what I want to see is candle closures and then a continuation down. So even on the hourly time frame, that's a massive push that's happening right now. What I'm going to do is create an alert right below these wick rejections here on the hourly, drop down to the 30-minute and the 15-minute. Got that nice strong bearish candle closure here on the 15-minute. This new one just started forming a little bit of a bottom wick. Ideally, I want to see a much bigger top wick coming back up and then a continuation down. That would be a much better sell opportunity for a better risk to reward. But if this candle does continue pushing, you do have another opportunity. But remember, you're 15 minutes out from another red folder, which is your ISM Services PMI. So either you wait on your 15-minute, 30-minute time frames, you wait for the reactions, and then you look for your trade. Or if you're trading right now, you're just trading very quick scalp opportunities. I'm talking about a couple of points, get in and out. That's it. Alright, we had an alert hit on gold. So same thing with gold. I'm going to create another alert right below this support. And then NAS is now creating a top wick and starting to push down. So you have your opportunity right now for NAS for a continuation down. And what I would target is we're pretty much going to clear below this. But after this area here, you're targeting down here, which is your support area, and then after that your next major level is going to be down here. So all across the board, I am personally just waiting for another 15 minutes to see what happens with the data points and then look for a trade. Are you guys able to check if you can hear me fine on YouTube, please? One of you guys? Let's come over for GBP USD. Got that top wick from this week. Still only looking for swing trade opportunities here, so I highly doubt I'm going to get anything today. We've got our bottom wick rejection here too at 1.34. Drop down to the daily. You're sitting in that consolidation, multi-day consolidation. So when I see that on a daily time frame, I know that there's not going to be much opportunities as I drop down to lower time frames. For this pair and Euro USD, I will very specifically only be using these for swing trade opportunities, because once price does break past that 1.348 area, we're looking for those buys up to 135 pips or drop down for about 95 to 100 pips depending on your entry, and then a continuation down for almost 200 pips. You have evidence right here and previous data points that show you that as soon as price breaks out of this consolidation, there is a ton of volume. So that's all we're going to end up catching. So I'm going to create my alerts right below 1.34 or above 1.348. Euro USD is the same exact thing here, where you have that top wick rejection or that resistance formation at 1.166 and your support at 1.159. Drop down to the daily, you're sitting in the same exact situation as GBP USD of price just consolidating. So I have created an alert right below this support of 1.159 or buy opportunities right above this resistance at 1.166. And then you have your buys up for about 125 pips, or you're looking for your sells in this entire range of about 80 pips, continuation down to about 129 pips. Alright, we just got an alert hit on US 30 as well. Haven't had a single clean candle closure below this area where the next candle just takes you right back down. So still waiting on this one for sure. So let's come back to the currencies now. The range on the weekly time frame remains the same. where you have 215.5 and you have your 214.2, which is your support. Drop down to the daily time frame. That's the same exact resistance. I had mapped out this support area based off of the daily time frame. Price is pushing below that. And then we have on the 4-hour time frame a break and retest. So what I'm going to do is adjust that level down here. Now the key thing about this pair is the fact that USDJPY had tapped into 160 and the intervention risk has started to increase. So like I said on YouTube last night, I posted another video about USDJPY, what's going on there, and what you guys should be watching out for. So because of that, we also had the intervention risk and the market sentiments that we're setting up, the trades that we're setting up. And then on top of that, we had Bank of Japan's governor who spoke, and he said that it's hard to pinpoint the exact level of the neutral rate. They're going to scrutinize how Japan's economy reacts to changes to short-term interest rates. We do have the interest rates that are coming out pretty soon, I believe next week or the next 2 weeks. So the market's starting to prepare for that as well. In terms of the finance minister from G7, Japan's finance minister very specifically said that if we see those continued volatility in the yen, where you're seeing that massive push up, you're going to see another intervention. They are going to intervene into the market. Now the problem here is that they've already intervened twice this year. Once back in March, and then again that happened back in April with a massive push down. Now that we're tapping into 160 again, it's not the fact that it's just the level of 160, it's the fact that the yen is so weak against the dollar, and mainly it's because of the massive demand due to the war, the US dollar demand. And so if they're going to interfere again into the market, it's not really going to solve their problem of strengthening the yen. It's just a temporary solution. It's not a permanent solution. It's not really going to help them out much. So in order for this to really make a much bigger move, so far they've deployed about 10 trillion yen, which is about 65 billion US dollars into the market, just trying to strengthen up the yen between these two moves. Now they're going to have to come in with even a much bigger move for it to make a huge impact into the market. So that's the problem that Japan is sitting with at the moment. So with that being said, you still have opportunities here. It's not that you don't. It's just that you're only going to be looking for scalp opportunities. This is not something that you hold out for overnight or going into the next session. Now we have our level that we adjusted based off of the 4-hour time frame. You're going to drop down to the 1-hour time frame, 15-minute, 30-minute, and you're going to look for actual candle closures below this zone and then a continuation. So if you look to the left, we have this minor support, and if price can continue pushing back down bearish, then you have clean sells that you're looking at for very quick scalp opportunities starting for about 17 pips or so, but you have this entire range of about 40 pips. Ever since price has pushed back up bullish and then the intervention risk started to increase, specifically during Asian session, you've had this bearish pressure down for about 94 pips already. So that's purely just off of sentiment. There's no actual intervention that has happened here. So that's why we're going to be careful. For any buy opportunities, we want price to break above the previous 15-minute highs and then continue pushing back up bullish. So that's your 214.9 area, and then a continuation right back up. You're looking at about 17 pips, continuation up to the next high for about 30 pips, and this is a support level from previous time frames or the higher time frames. Your 1-hour support right there. Go on to the 4-hour time frame. You've had 4-hour candles that were tapping into the same exact low and not really being able to break below it until this next candle came along during previous London session. So that's the retracement that you can expect for any buy opportunities. Let's come back to USDJPY. So you have 160 as the resistance, you have 159.3 as your weekly support. Drop down to the daily time frame. That is the resistance level that we're looking at. We are not trading this pair at all. I'm just watching what happens here because that's going to tell me what to expect for the rest of the assets that I'm also trading. So if USDJPY crashes, you will see that your equities positions will also get impacted and your crypto. So please make sure you understand how the Japanese yen and their intervention here could potentially impact your entire portfolio. So here, as long as we're above it, the risk is still live. The further we push above 160 or closer to 160, it just becomes even more real risk. So that's why I'm staying away from this, but I am going to create an alert right below this daily and the 4-hour previous resistance, now the support level. So if price breaks below it, I want to observe what happens. As soon as price breaks below 159.3, the next stop here is going to be to come back down into around 157, and then even further down to, or 157.5 almost, and then a continuation down into 157. So that is going to be the much bigger move where you're going to see the unwinding happening for the equities. All right, any questions on any of the assets that we went over? You want me to explain something again? Any other questions? Cool. So we have the data points. We have been following the macro headlines already. So let's pull up some articles. For NAS 100, we have both of our levels mapped out, so we will see how the market's currently reacting to it. We've just had a massive push down, already down here, so you've already had a huge corrective move. What I would be expecting to see, depending on the data points that we get with ISM services in about 5 minutes, if we get better than the previous in the forecast, it remains above 50. I do expect that optimism to come back into the market, so a continuation right back up bullish, but we do need the corrective moves from higher time frames. So if you look at the 30-minute and 1-hour time frame, you need that top wick for this entire pair to continue dropping if it is. Right now we're in a strong bullish momentum, just looking at some corrections and grabbing liquidity. So I don't expect a massive down movement in the next 5 minutes or so. I'm expecting the market to get ready to give the next candles a top wick, which is going to be a push back up bullish. All right, let's pull this up. Yeah, no worries. All right, overnight, some more attacks that happened. Excuse me. One of the most serious flare-ups since a ceasefire went into effect in early April. Alright, right now the sides have agreed on a rough framework that should extend their truce by 2 months and reopen the Strait of Hormuz, though negotiations over the final details are still dragging on. There's already one casualty. Alright, so the oscillation pattern that we're seeing here ever since the war started, and then they started talking about this potential peace deal, is that they're continuing with the attacks, and then they keep saying that it's self-defense, but you also see that on the other side, they continue to push this narrative of we're still trying to talk, we're still trying to negotiate, we should have the peace deal, and it went from it's going to be signed in a couple of hours to a couple of days, and right now we still don't have any potential deadline of when we might see that. So right now the entire market is purely moving based off of market sentiment. Anytime these new headlines come out, there's huge volatility in the market. So anytime there's any sort of development of more attacks or the talks pausing, you're going to see that the equities are going to start dropping down, sliding right back down. And you will see that gold is also facing that pressure because of the US dollar strength. So it continues dropping as well. And then as soon as you see any sort of headlines of we're moving towards a peace deal, no, we're still talking, or like yesterday, we had that back and forth where we had on Friday the Iranian news outlets saying that their conversations had actually stopped. Any sort of communication between U.S. and Iran has stopped a few days ago. Trump came out and he's like, that was false news. And then we saw, the massive movement in the market right when he tweeted that, or he put that on X platform or whatever. We've had big movements just based off of this too, where Trump's saying that Iran has agreed that they will not have a nuclear weapon. But the problem here is that he will make that statement, and then we will get Iran's perspective, and they're like, yeah, we never said that. And then you'll see that continue to drop right back down. So we're trading purely market sentiment. That's why it's so important to understand what's happening from a fundamental perspective and read in between the lines. The in between the lines is the market heavily reacting simply on Trump saying, or even the Iran side saying, yeah, we have some progress. Yeah, the talks are continuing. There's still no deadline of when they're going to sign this deal. There's still no actual, we have figured out some of the key sticky points. They're still saying that, it's just dragging on. So the market's heavily reacting to that. But in between, you still have attacks that are going on in the background. And it just takes one attack too much that's going to derail the entire conversation. We got PMI much better than the previous in the forecast. I expect some wick rejections and then a continuation right back up. So here with the US 30, we did get candle closures, but now with the new data points, I'm expecting some wick rejections and then a continuation right back up. So the buys are going to be more valid here. And then with NAS, we dipped all the way down into the previous support areas that we were targeting from the 5 minute. We talked about this being cleared. We're going to come all the way down here. So we've already tapped into that. Now price is reacting, pushing back up. It's the first hourly candle. Give it about 5 minutes at least to find its direction to create any top wicks, bottom wicks. As soon as we have that established support and then a continuation, we have our buys that we can take advantage of. Any questions on any of this so far?
No questions. Thank you.
Yeah, sounds good. Yeah, so see US-Iran exchange military strikes to put fresh strains on ceasefire. We're not going to read the whole thing here. I just want to pick up some keywords that he ends up saying or statements. So Japan being a commodity importing economy, higher crude oil prices cause a deterioration in terms of trade. That is an increase in the outflow of income to overseas economies. Japan depends on the Middle East for more than 90% of its crude oil and is also highly dependent on the region for numerous other mineral fuels. This is the most straightforward document that you're going to end up reading about how the current situation is impacting not just the US or just the Middle East, but every major economy. So if you still don't understand what's pretty much happening, he's just saying it in the most straightforward way possible. But this is the same situation that every economy is sitting in right now, especially the Eurozone, being so close to the Middle East, being highly dependent on the oil, the crude oil from the Middle East, and then of course Japan here as well. Damn, this Joel Danny guy is just going at it. Give me a second, let me just catch up with the chat. Alright, let's come back. We've got a couple of seconds left. Seems like we have strong bullish pressure here that we're going to continue. US 30 made a nice top wick already. We're still holding on, but we should be ready to push. I don't think I'm going to be trading any currencies today, so let's just close that out. Gold push right back up into that area, so let's continue holding on to that resistance for push back down for any sells. And now we can bring that up a little bit more, so then if price can continue breaking below that, we still have scalps, take some partials along the way, and then we have our full TP. I'm still going to set my alerts for later into the session if price does continue to get some relief here, and then push back up. I think Chris is the only one who trades oil with me, so we're going to keep that one to the side for now. Alright, here is the fun part, because this tells us what we're expecting going into the BOJ interest rate meeting. Right now the expectation is that Bank of Japan is going to increase their interest rates by the end of the year by about 70, there's a 75% probability that we're going to get another rate hike. So it seems like the main driver here is going to be the future course of the situation in the Middle East. So if the war continues, crude oil prices remain elevated, economic growth will deviate downward and inflation will deviate upward from the baseline scenario. And then the opposite, of course, if they end up resolving, then you'll see that there's a possibility that economic growth will deviate upward and the rate of increase in the CPI will deviate downward from the baseline scenario. So this gives you everything that you need to know going into the Bank of Japan's meeting. And the only other live risk when it comes to JPY now is going to be that potential intervention. We're still kind of just hanging around here, but it seems like we still have a little bit of downward pressure. The reason why I'm not entering any sort of trade here at the moment, even though on higher time frames like the 15-minute, 30-minute, 1 hour, any of those, we're still getting that downward push, is because on the 5-minute, I'm using 5 minutes simply to check the volume. Now what that means is that I'm trying to see if we're going to get some big candle closures. That tells me that there's a lot more liquidity at the moment in the market that we can trade off of. I don't want to end up getting stuck in a trade right now where price is simply just going to end up consolidating for, a couple of hours or so and then finally get a move after that. I'd rather trade on big candle closures. The next candle gives me that clean move and then take that trade. But you can see here, about 15 minutes before the new hourly candle opened up, we had this nice strong bearish candle closure. Volume would have looked like if this next candle closed like that, and then the final candle or the candle right after that took us further down. After that, we're just kind of hanging around here. So we're still trying to find our direction, it seems like. I'm still going to create my alert for sells right below these wick rejections, and then catch the same exact sells to the downside. Now with NASDAQ, we have the movement here already, price pushing back up. I want to see that continuation. You just got a 5-minute candle closure. So this is what volume looks like instead here. So this one creates a bottom wick, flips back up, you take it. This is a much better entry that you're able to catch here. Place your stop loss down here, and then you can target right back into the top of the range here. So now you have a much better risk to reward, because then your stop loss level is also going to check out across multiple time frames. So like the 30-minute right there, the 15-minute right there as well. You got the 15-minute breaking the previous highs. On the hourly time frame, same exact thing. You're getting that nice bullish momentum. So we're just riding the bullish momentum here and just waiting for the corrective moves to be done. So you got your bottom wick. Let's get a little bit more push, and we can take a potential entry. Alright, let's take it up. I'm already in. Alright, I got 614 on my price. 614. I'm going to target 715, and my stop is 85. So let's check out the stop. Let's bring that down a little bit more right there, which is okay. We'll do 580 then. Let me adjust it on my end too. All the trades that I'm taking this week are purely 1% risk on my account size. My average is 2% that I go for. So I'm going to bring the 2% back for next week. We're about to have a 15-minute candle closure here, so the reason why I still have a wider stop loss or down here is because I'm accounting that the next candle is going to need a bottom wick to continue pushing back up. Also why we are entering with that 1% risk, because we have the confirmation of that bullish momentum, you have the positive data points, but in case price still needs to come back down deeper and then continue pushing back up. So that's not going to be any new behavior, given that we have seen the same exact thing here in the past for a continuation back up. So that's a massive push up that we're already getting from down here. So I'm riding off of that momentum to the upside. If there's any questions about that entry, please let me know. About 40 seconds left. So as of right now, it's almost a 31 risk to reward, which means that at 1-to-1, I am going to be taking partials here. So my 1-to-1 here is going to be pretty much where price is sitting at the moment. So I'm going to let this 15 close, take some partials. I've closed out 50%. And I'm going to trail my stop here. Right into the zone, so we're going to make that 30. So my trail stop loss is right at the bottom of the zone here at 30,630. This is the new 15 that's forming. We're right into the zone here. So if price wants to create any top wick, bottom wicks, it does that in that zone. I've already taken partials. I'm still going to make sure that I get out of this trade profitable. Any questions about this entry? Everything makes sense. You guys see how everything that we usually practice pretty much comes together on the live charts. Missed the original short, that's all good. Did you actually end up catching the buys here though? Perfect. Alright, we had an alert hit on US 30. So that is the volume that I'm looking for, and then next candle that push down, and then now it's starting to reverse back up. So US 30, even on the 15, didn't really break the previous lows. It closed at the bottom of its range though. So since I already got NASDAQ, I'm not going to trade US 30 today. Gold, staying out of at the moment too. Perfect, 98 points on NQ. Beautiful. So now you're in consolidation. You do not take a trade in consolidation. If you didn't take that entry, you're just waiting now for the rest of the pairs to kind of hit their alerts. Let's just go over it real quick before we call it a session. So here on US 30, you have that volume now. This is the volume that we're looking for. So compare that to the little consolidation that we had here. So now what you're going to wait for is next 2 minutes, 5-minute candle closure, get that continuation down, which will give you that momentum on the 15 and the 30 to continue pushing. You place your stops. I would keep it aggressive. My style is aggressive stops. So I would keep it here. If you're not comfortable with that, you can keep it up top there. But the most important thing is that this 5-minute is able to close with a strong bearish candle closure, at least down here in the next 1.5 minutes. That takes you down. Remember that the 30 is going to close here in 10 minutes as well, about 12 minutes actually. So you want that continuation down, but you're only looking at a couple of points at a time. So first target down, being down here, and then a continuation down. It is still a massive sell from the higher time frames. So you still want to be careful, given that we will have to look for retracements. Let's come over to NAS. NAS is still pushing, so we're still solid here. So you don't have anything here. But if price taps into that area and then drops all the way down, does something like this, you're going to wait for the same exact thing where you wait for a candle closure and then a continuation down further for those sells. I'm just creating the alert, so when the alerts hit, I'll let you guys know in Discord. But I am personally done with whatever this trade does. Let's come over to gold. Now with gold, based off the 4-hour time frame, we're still holding on to the support. Come down to the 1-hour time frame, the last 1-hour candle closed with a massive bottom wick rejection right back into the zone. The current 4-hour or the 1-hour candle made a bit of a bottom wick into the previous support and a bit of a top wick, but we're still trying to find our direction here. We don't have that massive bullish momentum for any sort of buys, and we don't have the massive seller's pressure either for any sort of sells. So you can see here now on the 30-minute time frame how price is simply just consolidating. So there's no trade until one of these alerts hit. Come over to silver. So silver still holding onto the 4-hour support. 1-hour time frame, last 1-hour candle also closed right into the zone after a massive bottom wick. The current 1-hour candle did flip back down bearish after creating a top wick, but once again, we don't have any candle closures here for a confirmation down. So at least wait for a 15-minute or 30-minute candle closure down here, and next candle takes you down. As of right now, it seems like we closed down here, made a bit of a retracement, and getting ready for a seller's pressure. So getting ready does not mean that the entry is there. It just means that the market still needs a little bit more time, a little bit more volume for that continuation. These candles could very well just close like this and then take you right back up into that consolidation up top here. So that's why I'm saying there's a difference between getting ready and actually taking the trade. Is anyone trading currencies here? Or are we all good on the equities?
US 30 for me at the moment.
All right. So if this price continues to push and we actually get some strong bullish candle closures up top there, I'm going to trail my stop loss a little bit higher. You got your US 30, and you are solid with that move. So that's pretty much it. We've already managed our trade. We have talked about all the other assets as well. Pretty much good. Let's check out S&P 500. Check this out then. We are definitely not seeing an altcoin cycle looking at how these things are moving. Realized loss is 2.5 billion. I think that's the highest number that I've seen on this platform for Bitcoin, compared to 250.3 million realized profits in the last 24 hours. So if Bitcoin is moving in fear, there's no way that the altcoins are going to be moving with optimism. Ethereum, 425.4 million realized losses last 24 hours compared to 8 million in just profit. XRP, 51 million realized loss. Yeah, so crypto is not ready at the moment. We're going to stay on for about 5 more minutes. So you're about to get a 30-minute candle closure here soon. Please just account for that if you're in an active trade. It will have to create any top wicks, bottom wicks, and then continuations. other than that, we will have our live session here in the program tomorrow. We also have our market update call today at 5 p.m. PST. So I'll see you guys for that. And on YouTube, if you guys want, we still have our free trading program, completely free, that you can sign up for if you'd like. And then we also, students who are usually part of that will also get access to our weekly outlook calls in the beginning of the week, so you can be prepared completely as you're learning as well. So I hope you guys have a great rest of the day. That's pretty much it. That's the session. If no one has any other questions, I will see you guys for the next session. And that's it. That is the trailed stop loss hit right there as we're prepping for the next 30-minute candle. But based off the 5-minute, still don't have that pressure to the downside for any sells. Just looking for that corrective move. When this happens, that's when the next candle gets that volume for the next bottom wick and then continuation back up. So that's it. Please make sure you're not trading within this range. Wait for your candle closures, and I will see you guys for the next live session. Have a good one, guys.